Hello everyone, welcome to Big Players.
In this video, I am going to be sharing an amazing scalping strategy that can help you reach your financial goals through trading. The scalping strategy that I will share is one of the simplest trading strategies in my trading arsenal. So, this strategy will be very suitable for new traders or beginners. But before we start, be sure to like this video and subscribe to our channel, so that you don't miss on any of our new videos. With that being said, let's get into the strategy itself. First, let's talk about the time frame. Scalping is a form of day trading. But scalping consists of quick entries and exits for smaller amounts of profits. Hence, the best time frame for pure scalping is a 1-minute chart. On these lower time frames there are large moves that indicate a certain sentiment. But the fact is that these huge price moves are generally short-lived. The simple logic behind this is that for a couple of minutes the sellers may be absent. Hence, the buyers may be able to push the prices upwards. But as the sellers come back, they will see the higher price as a profitable opportunity and sell the stock. We will use this simple logic and create a trading strategy around it. So we will basically use two indicators in our strategy. The first indicator is the Bollinger Bands indicator. Bollinger Bands is a simple indicator that plots an envelope at a certain standard deviation above and below a moving average. Here, the Bollinger Bands are on standard settings of a 20-period moving average and 2 standard deviation levels. As you can see, we have 3 lines here. The central line is the actual 20-period moving average. The upper line is called as the upper band. And the lower line is called as the lower band. The upper band is simply calculated by adding 2 standard deviations to the moving average. Similarly, the lower band is calculated by subtracting 2 standard deviations from the moving average. The basic logic behind Bollinger Bands is that 90% of the price action occurs within the upper and lower bands. So we can expect the price to stay within the range for 90% of the time. Therefore, under normal circumstances, we see that the price finds support at the lower band and the price finds resistance at the upper band. Therefore, these bands act as a dynamic area of support and resistance. But at the same time, in strong trends, the price does not respect these bands. For instance, in a strong uptrend, we see that the price stays around the upper band without facing any resistance. Similarly, in a strong downtrend, we see that the price stays around the lower band without facing any support. But for the most part, the upper and lower bands provide strong resistance and support respectively. We will use this particular characteristic to find trading opportunities. This means that we will look for selling opportunities when the price is near or above the upper band. And we will look for buying opportunities when the price is near or below the lower band. Then we will look at the second indicator to confirm our bias. The second indicator in our strategy is the RSI. The RSI stands for Relative Strength Index. The RSI is a momentum indicator that measures the intensity of recent price changes to reflect overbought and oversold conditions. In simple words, it measures the strength of the recent price trends. The RSI is an oscillator. Hence, the value of the RSI revolves between 0 and 100. By default, the RSI is plotted based on the last 14 candles. And the overbought and oversold levels are set to 70 and 30 respectively. There are a couple of ways traders use the RSI. Some of them use it as a binary indicator. Hence, if the RSI is above 50, the stock can be said to be in an uptrend. Similarly, if the RSI is below 50, the stock is said to be in a downtrend. This is a very immature approach towards the indicator, and we should not use this approach. The other way of trading is by using the RSI to trade on overbought and oversold levels. So, whenever RSI goes above 70, the RSI is said to be in an overbought condition. In other words, the stock has become expensive. Therefore, we can expect the price to reverse and fall. On the other hand, when the RSI drops below 30, the RSI is said to be in an oversold condition. Hence, we can expect the price to reverse and start an uptrend. We will use this approach in our trading. But we will change the settings of the RSI. We will change the period from the default 14 and make it 8. We will also change the overbought level from 70 to 80. Similarly, we will change the oversold region from 30 to 20. Now we will look for confluence between the RSI and Bollinger Bands. So, we will look for selling opportunities when the price is above the upper Bollinger Band and the RSI is above 80. On the other hand, we will look for selling opportunities when the price is below the lower Bollinger Band and the RSI is below 20. But we will not blindly place trades in such conditions. We will use the inside bar or engulfing candlestick pattern for our entry. Let's look at an example to understand the process of the trade. Here we have the Euro-USD pair on a 1-minute time frame. Here we see that the price makes a big red candle that closes below the lower Bollinger Band. But the RSI did not close below the 20 level. Then, the subsequent red candle also closes below the lower band. This time, we see that the value of the RSI goes below 20. Hence, we have a strong confluence here. The price is below the lower band and the RSI is also oversold. Hence we can expect an up move. The up move may not be a trend change altogether, but it could be a small pullback. So we will look for a buying trade on this candle. We wait for a candlestick pattern. As you can see, the subsequent candle is a small green candle that is completely inside the range of the previous red candle. Hence, it is an inside bar. So this is our trigger candle. We will place a buy order above the high of this candle. As you can see, the next candle triggers our entry. We will keep our stop loss below the lower band, and we will exit when the price touches the central Bollinger Band. As you can see, we made good profits on this trade. The risk to reward ratios in scalping are very less. We can keep a minimum of 1:1 RR ratio. At max we may sometimes find good trades that can give us a 1.5:1 risk-reward ratio. But we cannot expect 1:2 or 1:3 RR ratio. That is unachievable in scalping. The whole point behind scalping is to catch small moves in the market to accumulate small profits. Let's look at another example. Here we see that on this candle, the price was below the lower band and the RSI was also below 20, which is the oversold region. So we were looking for buying opportunities here. The next candle is a big green candle that completely engulfs the body of the previous red candle. So we place a buy order above the high of this candle. Our orders get filled here. We keep our stop loss below the lower band and we exit at the central Bollinger Band. So that was a profitable trade. Now, as the time goes on, we also spot a selling opportunity. Here, we see that the price was trading above the upper band, and the RSI was right at the 80 level. Hence, we have a confluence between the Bollinger Bands and the RSI. So we expect the price to make a down move. We wait for a candlestick pattern to trigger our entry. As you can see, the next candle is a small green candle that is completely inside the range of the previous candle. So, this is an inside bar candlestick pattern. So, we place a sell order below the low of this candle. Our orders get executed on this candle. We keep our stop loss above the upper band. We exit on this candle as the price reaches the central Bollinger Band. As you can see, we made 2 good trades within a matter of 25 minutes or so. This is a really powerful strategy, especially for beginners. Hence, I recommend you to try it for yourselves, and leave a review in the comments section. That brings us to the end of this video. If you liked this video, then be sure to subscribe to our channel so that you don't miss on any of our new videos. See you soon.